Welcome back. M&A is on the radar, and we have two experts to talk about the trends. Sumeet Abrol of Thornton, and we have Bhavesh Shah of Equirus with us. Thanks very much, Sumeet and Bhavesh, for joining in. And, the genesis of this discussion is obviously some of the latest announcements, including the one that came in from Tega Industries, a small company looking to acquire an international giant. And it seems that, leverage buyouts perhaps are coming back in fashion or back in trend, at least in this example that I just quoted. But you tell us, how do you rate and rank some of the outbound activity that we've seen over the last 12 months from India, and what lies ahead? Sumeet, let's open with you.
Yeah, thanks for having me on the show. And I think let me start with two simple words: very activated. If I recall, last year, 2024, we saw about 120 odd cross-border outbound acquisitions valued at about $17 odd billion. This year, 8 months fast forward into August, we've already seen transactions worth about 11 billion already getting transacted, about 100 transactions already done. And all this activity cannot just be concentrated and driven by the mega deals. So there is very significant mid-market participation in outbound cross-border activity. And that is expected, with what we've seen in the last 5 years in India, with Indian corporates not being in a better position or in a better shape to go after outbound expansion, with buoyant domestic demand, very healthy balance sheets, a very strong and supportive banking ecosystem, and very importantly, favorable capital markets, which are creating headroom on equity dilutions, which is creating that muscle power to support some of those exotic buyout structures, as you said, leverage buyouts, debt financing with equity coming in. And then, of course, there is that increasing gap in domestic versus international acquisition pricing, which is creating that headroom to deliver shareholder value. So I think overall, extremely exciting times and aggressive deal making by Indian buyers. And we are increasingly seeing a lot of Indian participation on most global deal tables, which are in play.
Sumeet, lots of interesting points that you've raised, but let me pick on the last one and go to Bhavesh on aggressive deal making. Bhavesh, yesterday we had that big announcement by Tega, and Sumeet was also talking about the rise of these mid-market champions from India going abroad, buying large assets. Look at Tega's example. It's a 13,000 crore market cap company, and they've gone ahead and acquired a company exactly of the same size, similar size. What are the pros and cons? Because there is some fear that Indian companies perhaps, or maybe in this particular transaction, you're stretching yourself too thin to make this buyout.
Yeah, good morning, and thank you for having me. I think there has always been an urge in the corporate India to kind of do outbound acquisitions. And we have seen this happening even in 2006, 2007, preceding the global financial crisis. And after the GFC, the trend kind of started, waning down. But the technology, the market positioning, the products that you get through international acquisitions is at a different level. I think the new drive is also driven by one of the major things which is now happening globally, which is the global trade rebalancing, which is happening across countries, driven by US tariffs. So the companies are even thinking about how do we now play the future in terms of markets, in terms of products, how do we export, how do we kind of place ourselves in terms of manufacturing. These are some of the important factors which is driving the corporate India in terms of the strategies. Some of these companies are large. They are, from a risk perspective, yes, the companies which are acquiring from India are, they're comparatively significantly larger in the international markets. But the question over here is, are the cash flows good enough to take care of the debt servicing that the companies are using to acquire them? And as long as the cash flows are good and there's a good amount of buffers which are put in as far as the operating cash flows are concerned, this may make sense with the very careful safeguarded measures. The outbound M&A can continue to do pretty well.
Absolutely, and that's really important, and that's exactly what we want to understand, whether the conversations are being as nuanced or not. And maybe quick sense from both of you, Sumeet, on this. That's exactly my question. As deal makers, of course, your job is to get the deal, on the table and get it signed. But from a shareholder perspective, it's very important that a lot of the details, the intricacies that Bhavesh was pointing out are taken on board. So the deals that you're seeing off late in the conversations, I mean, how much of it is bravado because maybe there's easier PE money or easier access to funds? And how much is coming in from just maturity and very careful consideration?
So maybe I can come in there and just to kind of counter that point. Yes, as deal makers, the idea is to get deals done, but it all starts with establishing the strategic fitment, which I think is top of the considerations to build any M&A rationale. The moot question here is M&A risky as a corporate strategy? I mean, of course it's risky, but is it any significantly riskier than putting any new capital expenditure or launching new products or getting into new markets? Perhaps yes, but I think Indian corporates, as I said today, are in a position to better manage the nuances. First of all, the willingness to assume that risk on back of strong tailwinds, and then ability to manage that risk is at an all-time high. When we look at transactions, there are clearly 3 or 4 things that stand out. The first test is, as I said, strategic fitment, and we are increasingly see that a lot of these acquisitions are being done to fill in some very serious capability gaps versus these being just pure value arbitrages. And of course, there are favorable financing structures to these Indian companies which they have never been exposed to, which are now available in international markets, which are fueling some of that activity. But what I can tell you is what we are not seeing. We are not seeing any big ticket deals breaching some serious deal discipline on fitment. We are not seeing any billion-dollar gambles as yet on untested, non-profitable, high-risk business models. Some of that activity which has been more localized. I don't think we are seeing some of those trends and themes in international activity. And I'm seeing that increasingly Indian corporates are seeing this as a real opportunity to seize the global center stage and to build some of those multinationals from India. So I think broadly we are okay in terms of the overall discipline that we are seeing on transactions right now.
Sumeet, are we seeing similar? Yeah, go ahead, Bhavesh.
Yeah, and to add to that, I think we as investment bankers, at least at Equirus, we kind of don't think about ourselves as transaction bankers, but as relationship bankers to the corporates. So we would always advise what is in the long-term interest of the companies and the shareholders. Now, in that regard, it is very important that those safeguards which I mentioned earlier are in place. But what we are seeing also increasingly is even the corporates are very, very careful in what they are doing. I mean, of course, these are opportunities which need a very short time of decision to kind of, turn around and say, yes, we are there, we are not there. But at the same time, there is a lot of thought process which goes behind whether does it make strategic sense and what is the risk involved if either of the variables, which is operating cash flows or the debt or the market changes, these are definitely considered while going ahead with
That's really good to know. It's very reassuring to hear that the aggression is measured, it's careful, it's calibrated. Very quick 10-second answer. So then the next hot sectors, the next set of big deals, where should we keep our eye on? Bhavesh, quickly, 10 seconds.
Yeah, I think industrials, pharma are one of the bigger areas where we can see some action over here.
Sumeet?
Yeah, so the tailwinds of the shift in global supply chains will keep manufacturing industrials very hot. Technology-led acquisitions will continue to be in flavor for acquiring capabilities overseas. And then, of course, pharma is always right up there for big ticket deals on outbound.
Okay, gentlemen, we'll leave the conversation here for now. Thank you very much for joining in.